Again, another range-bound morning. But this is our special segment, Charting Trends. Rahul Sharma, Director and Head Technicals and Derivatives at JM Financial Services, joins us to decode the markets from a technical lens. Rahul, thanks a lot for joining in. First, if you can, set the tone of the interview. What do you see as the markers for the index? It's hovering around the 17,000 mark and doesn't look like there's any reason for the range to break out. But you tell us, what are the charts looking like?
Yeah, very good morning, Sonia. So it's kind of a jail kind of a situation where the markets are looking for a jailbreak, and apparently none of the bands of the so-called consolidation are being taken out. Now, clearly, markets in terms of the FI positioning have been very heavily short, but since the last 3 odd trading sessions, we've seen some kind of a breather coming back into the aggression. Now, overall, if we take a top-down approach, we have US markets on one side where a bit of a recovery, a bit of a bounce back is seen. In fact, Nasdaq has outperformed the Dow Jones by a big margin. And the way the global scenario is set up, we still continue to be one of the worst performing equity indices globally. Whether this sustains or not sustains will be the key to that will be the area of 16,800 odd. 16,800, 830 is the area where we formed the bottom a few days back. And as long as this level remains intact, which is the lower band of this current consolidation, there is a good chance that we see a recovery happening towards. We have the monthly expiry approaching. We have the financial year also closing on Friday. I think a bit of relief rally is very much on the cards in the short term. So I think short term, there is a bounce back possibility. 17,300 is an immediate target. If that level gets taken out, there's a good possibility that we head towards 17,600. But the texture of the market is still not exactly out of the woods. Yesterday, we saw a death crossover happening in the Nifty, where the 50 DMA cut the 200 DMA from top. And generally, we've seen in Indian markets such death crossovers do not act immediately, but they act over a period of time. So I think one bounce back, and post that we should again be heading for another round of downside maybe in the coming few weeks.
Okay, all right. Hi, Rahul. Maybe oversold in the near term, but let's see how much we can bounce from here. But let's talk about equity markets in just a bit. What about gold and silver? Suddenly after a long while, everyone's focusing on gold. Gold's making fresh all-time highs. Talk of increased allocation to gold. So do you believe there's more upside there?
Yes, absolutely right. So, all that shines is actually gold and, gold and silver. Both of them have pretty robust technical setups, classic buy on dip setups. Dips are to be bought into. I think there is some more upside left in both the precious metals. In terms of percentages, I think in the short term, we could very well see another 5 to 6% upside coming in both the precious metals. And technically, we are quite positive as a research house as well on both gold and silver. As far as the other commodities are concerned, I think oil is something which is sideways. It has seen the round of downward sentiment that we saw in the coming few days, 2 weeks. I think it should be range bound. Whereas as far as the USD INR is concerned, I think that is structurally, although bullish, but in the very short term, that also continues to be sideways. So no real, apart from gold and silver, no real major trends forming in any of the currencies and commodities as we speak.
Rahul, any stock setups which look very interesting, irrespective of the overall market view, which can yield good results?
Yes, Prashant. So, in the words of Edward Mackey, the only way to reduce market risk is to stay out of the market. It is, one of those phases where volatility has taken traders, on the back seat. But there are some silver linings, some setups which are clearly standing, head and shoulders above the rest of the market. One of those sectors is capital goods. We continue to stay bullish on ABB. We continue to stay bullish on the likes of L&T and Cummins India as well as Siemens as well. So this is one sector which has regularly seen buying at key support levels, and traders have been rewarded on the long side. Apart from that, I think cement is another sector but cement is, again, you have the sector leader, UltraTech Cement, exhibiting relative strength, but the rest of the stocks are actually, still yet to find their feet. So UltraTech Cement would be a top pick from the cement pack where one can look to go on the long side. On the short side, I think clearly metals is one sector which is clearly short. Vedanta is one of our short topics, could see another 5 to 6% downside in the very short term. Mid and small cap is where the maximum pain is in terms of the selling pressure. In fact, the mid and small cap indices gave a fresh breakdown in yesterday's session, and there could be more downside to this. And this is where the majority of the retail participation is also present. So, index-wise, we may be just like 10-12% down from an all-time high. But in terms of the pain, we are actually into a proper bear market when it comes to mid and small cap indices. So, from the mid cap space, I think two stocks which look bearish. One is Federal Bank. It has just given a breakdown in today's session below 125. Could be headed for downside levels around 118, 115. Could be an ideal short candidate with a stop loss at 128. Another one is Ashok Leyland, which continues to be on the selling side. So, broadly, these are the pockets of the market which are sort of looking weak.
Okay. All right. So, Rahul, Federal Bank and Ashok Leyland, both those two on the charts are not looking too good. But I missed the point on the small and the mid-cap indices. Clearly that's where the pain is. How much lower can it go going by the charts? I mean, is there some support levels that you have?
Yeah, right. The clue lies in what is happening with the Nifty 500 index vis-a-vis the S&P 500 index. So if I see the long-term charts, clearly the outperformance that India enjoyed over a long time, over about 18 months or so, that has been taken out and it is approaching a long-term support line. So my sense is maybe a few weeks here and there, maybe, it could be another last 2 weeks where we see the mid and small cap, which is the broader market sort of, exhibiting further weakness. In terms of percentage downside, in terms of levels, I think there could be another 3 to 4% kind of a slide that we can witness from these levels. But having said that, I think it is best to be, sitting on the sideline. This is not a market where, you can short anything and, that will be an ideal trade to take. But my sense is as we, approach this extremely oversold line, even on the relative charts, there is a good chance that, we see a reversal happening in the broader market. So the level wise, in terms of Nifty, it could be 16,600, it could be 16,400, depending on how we negotiate the next 4 trading sessions. Post that, I think we'll have further clarity as to how are we shaping up, especially in the April series.
Okay, I just have one final question. You said UltraTech Cement, one of the stocks that you're looking at on the charts. Anything else where you see further upsides in the near to medium term and something that can perhaps buck the market trend?
Yeah, so one of the consumer names, comes to the top of our minds, which is Titan. So, this stock has been under pressure since November 22. A long-term trend line has been sort of, taken out about 2,500. And I feel that, there is a good 8 to 10% kind of an upside potential in Titan. So around 2440 is where the stock has formed an intermediate base. One can keep a stop loss below that. And I think there's a good chance that we may see 2,800 odd by the end of April within a month's time. So Titan is one name that we like. Capital Goods is another. ABB remains our top pick on the capital goods space. And along with that, UltraTech Cement, as we discussed, looks good for a robust upside in the coming few days.
All right, we leave it at that, Rahul. Thanks a lot for joining in. ABB is a stock that has had a very, very strong run, 68% higher in the last 12 months. And continues to actually, be quite resilient despite all the volatility of the market. By the way, overall, the index itself is now very, very flat. It's just some of these new age tech companies that are under pressure. So, something like a Nykaa is now losing almost 3.5–4%. So that entire pocket is not doing that great. And even pharma. So you have Divi's Labs, Apollo Hospitals, etc. that are well in the red. Let's slip into
a broader market. If we can have the advanced decline up, we were just talking about how it just crossed over, right? But it's rapidly deteriorated. So now we got 1,400. It's become suddenly 2:1 in favor of declines. There you go. That's how the picture changed in the last just 15-20 minutes of trade. So the Nifty is flat. The broader markets are, losing. I mean, it's not as if I'm looking at stocks which are down. The list of stocks which are down. It's not as if it's a very long list of big volume-led losers. But numerically, declines outnumber advances 2:1 for now. We'll take another quick break here. Manisha joins in to put the focus on the commodity space. Where is the action? Stay tuned. Coming up.